Hello and welcome back to the channel. Today we're breaking down the latest numbers that actually matter for your mortgage rate and housing decisions. No complicated jargon, just what's happening and how it could affect you if you're buying, selling, or renting. Let's start with mortgage rates. Mortgage bonds took a hit this week after Iran issued a strong warning about the Strait of Hormuz and potential damage to oil infrastructure. Oil prices jumped, with WTI crude trading around $80 a barrel. As a result, both stocks and mortgage bonds moved lower. Right now, mortgage bonds are struggling at a major resistance level around 99.99. They've been stuck in a wide trading range, and analysts are watching support about 0.5% below current levels. At the same time, the 10-year Treasury yield is testing 4.588%. If it breaks through that ceiling, we could see yields climb toward 4.66%, and that usually pushes mortgage rates higher too. So for home buyers, rates remain sensitive right now. Any big move up in yields could make borrowing more expensive in the coming days. It's a good time to stay close to your lender and be ready to lock in if the right rate appears. On the housing and rental side, there's some encouraging news. CoStar's latest rental report for May shows rents rose 1.3% year over year. That's down slightly from the previous reading and a big slowdown from 2.6% growth at this time last year. This cooling in shelter costs is finally showing up and should help keep overall inflation tamer, which is ultimately good news for mortgage rates over the longer term. Retail sales also came in solid, up 0.2% in June, right in line with expectations, with an even stronger 0.5% gain in the core control group that strips out volatile items. That points to consumers still spending, which supports a stable economy but also keeps the Fed watching closely. Finally, the labor market remains healthy. Initial jobless claims fell to 208,000, and continuing claims dropped as well. Good signs that the economy isn't slowing too fast. Bottom line for you, mortgage rates are under some short-term pressure from oil and geopolitics, so timing matters if you're in the market. But the longer-term picture shows cooling rent growth and a still solid economy, both factors that could support more stable or even lower rates later this year. If you're thinking about buying or refinancing, now's a great time to talk to a lender and run your numbers. Drop a comment below. Are you planning to buy soon or waiting on rates? Hit like if this update was helpful, and I'll see you in the next one with more straightforward housing and mortgage updates. Thanks for watching. Stay informed and make smart moves.